Support versus resistance. You will learn how to identify a support and resistance zone on a trading chart, psychologically important chart marks, trend reversals, fault signals like a bull or bear trap, and of course some basic facts about support and resistance while day trading.
Let's go. I don't want to go to work cause my boss is a jerk and I'm not even that paid. I need a change in my life.
My name is Mike and this is the Nice Trading Bro. I will teach you everything about trading cryptocurrencies, Forex, gold, oil, your chart patterns and indicators, etc. Let me be your trading teacher and bro for the next couple of minutes. But now let's jump right into today's topic. In trading the stock market, Forex, crypto, gold or any other asset, the goal of chart analysis is to make a forecast for the performance of the asset in the future from its past price performance. This can be the continuation of an existing upward or downward trend, or a trend reversal like a price recovery or a price setback. This creates supports and resistances because many investors base their trading decisions either on round price marks, such as like $25,000 or $30,000 like Bitcoin, or 1,000 points for indexes, or on price levels which turning points have already occurred in the past. Support and resistance can be drawn as horizontal lines or zones in the chart. Support versus resistance. A support level is a level where the price tends to find support as it falls due to an increase in demand for the asset. This means that the price is more likely to bounce off this level rather than break through. It's just like a rubber ball bouncing from the floor once you let it fall on the ground. A resistance level is the opposite of a support level. It is where the price tends to find resistance as it rises due to an increase in selling interest. Again, this means that the price is more likely to bounce off this level rather than break through it. If a price breaks past a support level, that support level often becomes a new resistance level. The opposite is true as well. If price breaks a resistance level, will often find support at that level in the future. Support. Traders speak of support like support lines or support zones when the price is above a price level that was relevant in the past. Support line and support zones. Role reversal. Resistance turns into support. Resistance. Resistance means that the price of an asset is struggling to overcome a significant higher price level. For example, there may have already been one or more unsuccessful moves in the past to break above the price level in question. Role reversal. Support turns into resistance. Psychologically important. Round chart marks. Traders love round marks because they are looking for some form of guidance for trading. In addition to past highs and lows, this purpose is often served by round chart marks. Trend reversals, breaking through support and resistances. When a relevant level is significantly broken below or above. This is also referred to as a trend reversal. The breaking of a support is considered a potential sell signal. The crossing of a resistance is a chart breakout as a possible SPY signal. Resistance and support retests. Only about 50% of the movement after trend break perform a retest before the new trend is finally established. Fault signal at support and resistances. If the price returns immediately below the resistance or above the support after breaking through, is called a bull trap or a bear trap. Fault signals often result in a very fast and sharp price reaction, a very fast price movement in the opposite direction, so that the trader or the investor's stop loss is triggered very quickly. Fault signal 1, the bull trap. A rise above a resistance ensure that optimistic investors called bulls bet on continued rising prices, for example with call options or purchases. However, if the price then starts to fall, contrary to expectations and this movement continues, the investor has fallen into a bull trap due to a false signal. False signal 2, the bear trap. In an upward trend, a brief price slump below a support line causes pessimistic investors or traders, also known as bears, to bet on a downtrend trend reversal with put options or short sales. However, if prices then recover against expectations and continue to rise sharply, a false breakout has occurred and the investor has fallen into a bear trap. Basic facts about support and resistances. Support and resistance exist only because investors believe they are real. They occur when there is consensus among enough investors that buying or selling at a certain level makes sense. The effect of both leads into a self-fulfilling prophecy. In general, the more often a support level or resistance level is tested by the price, the weaker it becomes and the more likely it is that it will fall, because when too many investors bet on a certain very obvious event, the opposite often happens in the market. Investors should avoid placing buy orders and sell orders exactly on support, resistances or round price levels. It definitely makes sense to sell just below resistances and buy just above supports. Otherwise, there is a risk that the price turn a tick earlier and the investor does not get an execution. The same applies to stop loss orders. Due to the possibility of false signals, other criteria than support and resistance should be used if possible, such as trend lines, indicators, Fibonacci levels, etc. Don't forget to hit the subscribe button and the notification bell to get notified every time we upload new videos about trading strategies and tips.